We're getting some breaking news from Bloomberg News right now on Finance Minister Mr. LeBlanc. He says he will not run for Liberal leadership. LeBlanc says he will not run to be the Liberal leader, so that takes one name off the table. Our next guest is tracking Canada's merger and acquisition markets for 2025. Let's find out if there will be an increase in activity in Canada and globally. Joining me is Neil Selfe. He's founding principal at INFOR Financial Group, which is one of the top independent Canadian M&A advisors. Good to see you, Neil. Thanks for joining us.
Good to see you, Mark. Thanks for having me on.
Let's let you toot your horn just briefly off the top here. I seem to remember 2024, INFOR came in sixth in terms of deal activity, and you were number one by a long shot among independents. So congratulations on that. Can you describe the competitive environment in M&A for INFOR?
The competitive environment is always tough in Canada. You have the domestic banks, you have the international banks, and you have the independents. We founded INFOR a decade ago, really with an eye to being the best M&A provider, independent M&A provider in Canada. Over the last decade, we've literally done hundreds of deals, $41 billion of deal value. Last year, we were fortunate to be number one by a wide margin. But, you know, Canada's a small place, and it only takes one or two deals to push you over the edge. So we're grateful that we were number one, but we also know we've got a long way to go to take on some of those global firms in 2025.
All right. Speaking of global M&A, let's start there, Neil. I understand you believe there's a lot of dry powder, a lot of cash sitting around waiting to strike some deals, and that companies and just in private equity and others are looking to make deals. They're adapting to what you call known unknowns, and you're lifting from Donald Rumsfeld there, of course. Can you elaborate on that? What do you mean?
Yeah, I think we, in the last 2 or 3 years have been really tough for M&A. We came out of a record year in 2021 coming out of COVID, and then we were really faced head on with inflation, which caused central banks around the world to raise interest rates. And then we were faced with geopolitical uncertainty. So 2022, 23, 24 have been tough years for M&A, although the last part of 2024 was the best quarter or the best half year that we've had in the last 3 years. Sponsors in particular have a lot of dry powder right now. Both private equity and private credit providers are sitting on a lot of cash that they've accumulated over the last 2 to 3 years. The economic outlook globally is improving. Interest rates are down. Inflation appears to be in check. And so we expect those sponsors to begin to deploy capital. That said, there are a number of risks geopolitical risks, economic shocks that may come from tariff surprises. I think this time around, we've got a good sense as to what those known unknowns are, and we're better prepared to handle them. But we're not out of the woods yet, and we expect that although M&A will rebound and people have strong capital positions to take advantage of these conditions, I think we are still going to see the majority of folks be relatively cautious as we go into the first part of 2025.
Now, in Canada, Neil, you see some headwinds, which you were referring to there, but you also see it as an attractive landscape, and you're bullish. Why?
Well, I think Canada's going to lag in the first half of the year until we see where tariffs land, until we see where the government lands. We need greater certainty from a regulatory perspective. But we have a lot of what the world needs. We are energy rich. We are resource rich in terms of metals and rare earths that the world needs. We have a strong technology sector that's leading the world in AI in many aspects. So I think we have a lot of what the world needs. We also have a dollar that's very attractively priced relative to global currencies right now. And by and large, because of the political uncertainty, I think Canadian companies are trading at a discount relative to their U.S. peers. And so I think you're going to see investors turn to Canada, perhaps not until the second half of 2025. They need greater political certainty until they do that. They need greater clarity on tariffs. But again, I think we're well positioned to take advantage of a rebounding global economy, and you're seeing it already. Yesterday, we saw the GFL transaction with Apollo and BC Partners providing capital. We've seen Rogers attract a sponsor for part of their wireless business. And in the largest transaction in Canada last year, we saw Mubadala enter by purchasing CI. And so I think we're going to see more of that, but we need a little bit more clarity on our government until it really takes full tilt.
And just lastly here, Neil, which sectors are the hottest in terms of deal activity? Is it all about AI, and which are kind of slow right now?
It is about AI to some extent, but it's not all about AI. We are seeing a lot of interest in financial resources, in financial services. We're seeing a lot of interest in services businesses. Where it's tough right now is in export businesses, producers that export, because we don't have a good read on what the tariff situation is. And while we have a number of sponsors and strategics kicking tires, I think they're going to hold off until they get greater clarity. But services businesses, financial services businesses, technology businesses are all in play, and we have files open on all of those in our office right now. I just think it's going to take until the second half of the year for buyers to move because they need that clarity.